So we are going into a season. If you are planning to switch property, you should only switch towards a stronger asset. I call it that our money supply has not decreased. It has not even stagnated. It has increased. This portion here was the 11 rounds of rate cut. So money supply tightened. Quantitative tightening. Now it's increasing. There's going to be a lot of people that will take profit from the equities, cryptocurrency. And what is going to happen next?
Feeling like a brand new me. For the very first time, I'm right where I'm meant to be.
Welcome back to NOTG. Today we're doing an update on the market. Importantly, what's going to happen in the next few months now. There is a very important news that's going to happen in September. By the time you're watching this, I hope that it's still August. Our editing team should be getting this out pretty quickly. So what's going to happen is that there's a lot of pressure to change the chairman of the Federal Reserve, which is Jerome Powell. So Trump, of course, President Trump is putting a lot of pressure in the sense of reducing interest rates. Now, there's already a lot of forecasts in terms of the amount of liquidity injection into the market, in terms of the upcoming quantitative easing that usually happens together with the Fed rate cut, because the mechanism for the rates to go down is that there's going to be injection into the market, whether is it obvious or behind the scenes, through buying of bonds, buying of government debts and all that. That happens on basically a global and national basis. So basically take note that in all countries, every country have their own central banks. Whenever they decide to inject liquidity in the economy, we call it quantitative easing. When they want to tighten it, what they will do is they will first raise interest rate and then they will tighten the liquidity in the market. So when there is liquidity in terms of injection of money supply in the market, what's going to happen is that the money supply is going to be expanded. When money supply is expanded, basically how you can track money supply is just very simple. You just need to head on to trading economics. Just type money supply, M2 money supply Singapore, all right? And you will realize that our money supply is actually coinciding with the trend graph in US. So, in fact, in the last year itself, in the last few months, just by the last 1 year, if you can see, our money supply has not decreased. It has not even stagnated. It has increased. It's always increasing in a sense because why we're very tight to the US market. So if I were to type money supply USA, you can also see basically what happens to the money supply. All right. So now it has jacked up. All right. So basically this portion here was the 11 rounds of rate cut. So money supply tightened, quantitative tightening. Now it's increasing because rates are going down. Now rates are still stable. The only thing is that what President Trump wants to achieve is that he wants the Fed to reduce interest rate, and there's a lot of pressure on it. And of course, the latest meeting that just happened a couple of days back is that they didn't cut their rates, all right? But September, there's already a lot of pressure that rates will start to be cut in September. In fact, they're forecasting about 2 rounds, basically towards the end of the year. So what will happen is that this is the forecast all the way up to 2027. So we're going into a season, probably in the next 2 years, of low interest rate environment. For those of you who have not refinanced your package, do not refinance now. Of course, disclaimer, that's my own advice and personal opinion. Talk to your banker, talk to your mortgage broker, they know better. But my own forecast is that if you haven't refinanced, do not refinance now. Rates are low. You get 1.99% right now in the month of August 2025. But in September, October, I think it's going to be even lower. Likely, my forecast is that we'll see 1.5%. And maybe next year we might even see 1.25%. So we're going back to a low interest rate environment. Remember, coming to the screen, very clear cut. How do you identify what market we are? If it's a seller's market compared to a buyer's market, the key functional difference is, what is this? Seller's market means that sellers has, I would say sellers call the shot. All right, sorry. Sellers call the shots. Okay, meaning that if I'm a property owner, I have real estate on hand, I have inventory, I have a couple of properties. I call the shots. I don't need to be fearful of the market because there's a lot more buyers. So there's more buyers, and I know the buyers are FOMO. And why are they FOMO? Because this is a low interest rate environment. So when the market is in an interest rate environment that is low, purchasing power increases. Why? Because for buyers to buy properties, their mortgage is lower and they feel that it's a good time to buy. And because when interest rates are low, everybody now wants to start to look at real estate because they know that, well, mortgage is cheap, mortgage is low, and basically fixed D rates are low, bond rates are low. It's better for me to buy real estate, leverage, and then, of course, hunt for properties that will appreciate. And because of this, sellers call the shots, all right? And usually in this environment, price will start to move upwards. And of course, developers will also track, is this a low interest rate environment? If it is, let's launch and let's be more aggressive, all right? Now, buyer's market was basically what happened in the last 2 years, 2023, 2024. Why? Because we had very, very high interest rate. There's 11 rounds of rate hike. I call it the buyer's market. In fact, it was from 2022 to about the start point of 2024. 2024 till end, basically we went back to quite a stable interest rate environment at about 2% 3%, all right? 2.x%. So buyer's market means that buyers call the shot. Buyers can take your time to hunt for properties, high interest rate environment. So why is it important to note which market you are in? Is because now towards 2027, this is going to be a seller's market. Now, when you enter into a seller's market, low interest rate environment, take note. If you're planning to switch property, you should only switch. You should only switch if you are going towards a stronger asset. I call it the next stronger asset, NSA. If you are going to a weaker asset, let's say you are switching to a weak asset, you want to switch from, let's say, a landed to a HDB because you want to liquidate and you want to basically retire, pay off, and maybe after you pay off a HDB, you have some pocket of funds, let's say $3 million, you want to park into maybe a dividend stock and stuff like that, keep cash because you want to retire 55, 65 years old. You should only do it when the seller's market is into its mid-run phase. That means don't be so like anxious to quickly sell your property because we are just starting to enter into the seller's market in the year 2025 to 2027. So maybe you should only sell in the year 2026. Let the market run first. Let the FOMO kick in first because your strong asset, let's say it is a condo or landed, will still have room to appreciate in price. This will have room to appreciate in price in the FOMO market, in the seller's market, all right? And you are the seller, you call the shot, all right? Now, if you are not downsizing to a weaker asset to fully pay something to retire, like a HDB or a smaller condo and stuff like that, and you're thinking about appreciation, you still want to grow a portfolio, you want to expand, then what you should do is that you should not time the market. Because the seller's market, for example, let's say now you own a HDB and you want to move towards a landed or you want to move towards a condo or new launch or whatever, you need to identify the strength of the asset. This is definitely a weaker asset than condominiums because if you have been following us, there's 3 different strengths. HDB, 1.2 million in terms of quantity. There's new BTOs coming every month. And of course, condos, 378,000 condos in the whole Singapore, 10,000 new units every year. And then of course, landed property, 73,000 is not increasing in supply. So landed properties are the strongest apex, all right? We call it the apex property. So landed is apex, condos, and then of course, HDB is the base, all right? So importantly, note that the strength go upwards. This is rank 1, 2, 3 in terms of strength. I'm talking about the strength of the assets in terms of its stability and appreciation. And if you are going from a weaker asset to a stronger asset, basically you should do it anytime that you're ready. You don't time the market. And you should do it especially when you're entering into a seller's market. Why? Because the stronger asset is going to move up faster than the weaker asset. All right. So the stronger asset is going to move up faster. Why does it move up faster? Firstly, it's stronger. Number two, if you're shifting to a bigger one, you should also move. For example, you're shifting from a 900 square feet condo to a 1,500 square feet condo. All right. Assuming if price were to move up by 100 PSF, this guy is going to appreciate by 150K. This guy appreciates by 90K. So all the more you should faster move over to the stronger and bigger guy. Now, if you are moving to a landed, you should also not time the market. Move whenever you are ready. All right. So don't time the market because we're entering into a seller's market. Okay. Now, something to take note is also for equities. I believe what's going to happen is that now the S&P index is very strong. Cryptocurrency is going all-time high. There's going to be profit taking in Q4. So I forecast my own so-called based on my readings is that September towards December is going to be a season that there's going to be a lot of people, retail investors that will take profit from the equities, cryptocurrency. And what is going to happen next? They wouldn't keep cash most of the time. They're going to shift basically some of it into real estate. And that's usually the funneling process. The three-step process is that they will take out their profit, keep inside a stable store of wealth. And likely in Singapore, it's going to be real estate. And of course, we have already separated ourselves from all the rate cut cycle. Basically, we have rate cuts, rate cuts, rate cuts, but every time we go rate cuts, price increase. The last round was very strange. We have 11 round of rate increase, but price increase. Because globally, when interest rate increase, price will come down. For example, in the US. But in Singapore, because of the 16 rounds of cooling measures, and we are so small and our population are still increasing year on year, and we are such a global wealth hub status, and later I'm going to show you some statistics as well, is that now we're entering back into a rate cut season. I think our prices is going to scale up further, and hopefully it doesn't attract more cooling measures. The government already signaled already, all right? Last month, new reset back to 4 year seller stamp duty, even though that has no impact, but it just shows us that government is really putting a lot of focus to see what's going to be the impact of the rate cuts, because if the price will escalate too fast, new cooling measures might come in. And of course, touch wood, what new cooling measures can they come in again? Is that there's only a few mechanism that's left, right? Either you adjust LTV, ABSD is already so much already, so max. What else? LTV, TDSR further stringent. There's not much calibration left, right? They already calibrated BSD progressively, like 4 to 6% now, and then now sell time to back to 4 years. There's little cuts left on their hands, so we just need to wait and see. But what I'm trying to say is that if you have not really start planning, this is the best time to start planning to take advantage of the low interest rate and before any cooling measures might come in. Okay. Now, overall in Singapore, I'm going to share some updates. Is that the average holding period is pretty healthy. A lot more for first-time buyers are going straight into brand new condos rather than HDB. That's pretty interesting. And of course, the proportion of younger buyers that are entering into brand new homes is also increasing now. This could be based on maybe people are doing better, more professional jobs in the younger age bandwidth, and then they recognize that private property is a way to go. They want to own an asset class with a store of wealth, or maybe they are getting married later. They buy one under each name first, then get married later. So that could be a couple of reasons as well. And the condo ownership is going up on a year-to-year basis. All right, so depicted by this red bar graph. So basically, Singapore is in a stage whereby condo ownership is getting very, very popular. A lot of people are recognizing this asset class, and most importantly is that we have already delinked ourselves from the foreigners' support level. All right, so ever since 2018 with with ABSD coming in, 5.4% of foreigners contribute to the total residential transactions per annum. 65% are Singaporeans, 14% are PR. But just have a look at 2024. 83% of the condos are being snapped up by Singaporeans. PR is about 15%, about the same. Foreigner dropped to 1.22%, but there's no impact on price. Price, with all these 16 dots of cooling measures and ABSD, it continues to go up gradually at a very healthy pace. And always remember, 88,000 estimated condos and apartments are owned by foreigners, companies, and PR. Foreigners and companies, they will never sell. They might, but they cannot buy back. All right. So motivation to sell is very low. They buy back, they have to pay 60% ABSD. Singaporeans, 280,000 units plus minus are owned by Singaporeans. All right. So there's not a lot. We always think there's a lot of condos. There's not a lot because HDB has 1.2 million, condos has 370,000, landed is 73,000. All right. And sometimes in Singapore, we're just worried about our own property price, which of course is one of the most expensive cities in the world. But take note, while you're worried, people are coming in to buy, all right? Because we are listed based on the latest Henley Private Wealth Migration Report 2024. 9 reasons why high net worth families love Singapore. And we have been ranked the top 3 with the most high net worth inflows into us last year. And of course, on the last 10 years basis, every year there's 32,000 PRs granted. PRs, 5% ABSD, they will definitely buy. All right. And then, of course, naturalized citizens, no ABSD. Once the PR foreigner get the local passport, immediately they will start to buy properties. All right. And most of the time, because high net worth, they will definitely go for condos or landed homes. So basically, what's happening is that while we worry about the market, new buyers are entering into the market. So this episode, basically what I want to share is that the key takeaway is that we're shifting into the seller's market. Ready yourself, do your homework, start to prep and plan for your journey, because the most important thing is that you don't want to miss this phase that you can take advantage as an investor. Lower interest rates. And what's going to likely happen is that once developers, home sellers get confident, they're going to start asking future prices. All right. So if you are in a season that are ready to really hunt for investment through proper research data and frameworks, of course, you can click on the link right down below for a one-to-one consultation with our PLB team. We're very happy to share insights with you, work out your structure, work out your journey as well on how we plan for our clients. Of course, with that, I'm going to see you on the next NOTG episode. And we're going to come back with more episodes to analyze the market because it's going to be very exciting in the next couple of months. And we'll see you soon. You sure what you're doing? No regrets? You feel complete? Happy for you lah. Good. Happy for you. Good, it's good. The journey with somebody you like. Love, yes.